Hey folks, Dan Frio here with your closing bell for September 13th, 2024, Friday the 13th. Ooh. So we saw mortgage rates tick up just a little bit today. There really wasn't a reason for this, but let's go over and see what the broader markets are doing at this time. Right through here, Yahoo Finance is saying this: stocks set a banner week as jumbo rate cuts odds surge. But then you have this right through here. Why the Fed rate cuts, if they're bigger than usual, might send stocks reeling. So here's my take on it, folks. The data that we're getting in so far is signaling a soft landing. And let's just go over the data that we saw this week. Okay, so let's get to the main numbers that we're looking at is inflation and jobs. Okay, so on Wednesday is when all this data started pouring in for the week. So let's go over to Wednesday. On Wednesday, we had the CPI number. So think of the CPI, the C on the front of this, meaning consumer. So we have consumer inflation coming in on Wednesday. And then on Thursday, we had the PPI. Think of the P on the front of that is producer. Okay, so on the CPI, we had only one piece of this equation went up. It was core inflation, went from 0.2 to 0.3. However, year over year, the number went from 2.9 to 2.5. Remember, this was like 9% not too long ago. So these numbers are coming right in line with what the Fed's projections are. So do we need bigger rate cuts than otherwise? Well, let's go to the jobs numbers. Did you realize the jobs numbers, the unemployment rate actually went down this week? Went down. Okay, so that's what you're talking about on the jobs numbers. Initial jobless claims, last reading was 228. It was 230. So they're basically right in line right now. The good news is, from all the data that we have, there's no massive layoffs coming. Okay, but on the producer side of the equation, it did uptick a little bit, but again, it wasn't enough to offset the overall from 2.9 to 2.5 on the CPI. Okay, so that's the first part of the equation we have. Now, our house is going to crash. Our house price is going to go down. That's what a lot of people are waiting for. We're waiting for kind of two or three things to happen. One, rates to come down, and two, for that housing crash that I don't think will ever happen. Okay, so what you're seeing right now, it says mortgage rates are dropping, but home prices aren't expected to get cheaper. Here's why. There's pent-up demand. If you don't believe me, let's go over to Diane Swank. She's an analyst that I've been following for years and years and years. And all of a sudden, she just started popping up on CNBC again. So let's take a look at what she has to say about all this. And then we come back, we're going to analyze what she says, and then kind of take a deeper dive into some of those things. And then I'm going to come back to you and let you know where mortgage rates are ending for the week. So let's get to the interview. I think you're going to get a little bit more than you think out of this interview. So take it away.
Speaking of housing, the average rate on a 30-year mortgage falling now to levels last seen in February last year, according to new data out this morning from Freddie Mac, comes as the Fed gets ready to cut rates. Here with her take on what it all means for the housing economy, Diane Swank, KPMG chief economist. Welcome back, Diane. It's great to have you. Are these lower rates spurring activity in a way that you would think?
No, they haven't yet. We've seen it in new home sales where builders are also offering buy-downs, mortgage buy-downs still, and they've also moved down scale in terms of pricing to be able to tap into that pent-up demand among first-time buyers. We've got 12,000 millennials a day turning 35, moving into their peak home buying year.
12,000 millennials a day hitting 35. And that's the peak time of buying. So a lot of people out there are saying, oh, there's nobody buying homes right now. Folks, there are people buying homes, or at least people looking to buy homes.
And there is a lot of demand there. That said, we've not seen the reaction that we had seen earlier in the year. Every time the mortgage rate dipped, people flooding into the market. Part of that is people waiting for mortgage rates to fall more than they have on the hopes of rate cuts by the Federal Reserve. But another part of it is the affordability equation got worse with higher insurance costs as well. And I think that's very important to keep in mind, that it's not just interest rates that are holding people out of the market at this stage of the game. We've seen a lot of appreciation in home values. That's slowing. It should be showing up more in the inflation data in terms of rents, but that is one thing the Fed is going to be weighing as we go into this meeting next week.
Clearly, both campaigns are seeing in their polling data that housing is near the top of the list on affordability issues right now. From Kamala Harris's camp, $25,000 down payment support for first-time home buyers, $10,000 tax credit for first-time buyers, tax incentives for builders.
Great ideas. But what happened last time? If we go back to here, first-time homebuyer grants that they promised us back in the heyday never came through. It's still tied up in Congress. So if the $15,000 down payment assistance from the Biden administration didn't go through, do you think Harris's plan for $25,000 would go through?
Builders, do you think this is the kind of thing that will stimulate it?
Well, what we really need is we need to be able to also change a lot of zoning laws, and that's really where the crux of the problem is. We've been underbuilding for decades in this country, and it's been because of a constraint on zoning. Some of the most affordable housing that tends to be the ladder up, 2 to 4 flats, that had its heyday in the 1970s, hit 143,000 in 1972. Last year, those 2 and 4 flats, which are the ladders that get many people onto the rungs of home ownership, those were only 14,000 last year, and that's because of the zoning situation that we have in the U.S. and the not in my backyard zoning laws we have.
So you think it's a supply issue? And actually, that's more on what President Trump has been running on, to deregulate.
Well, it's more than just deregulation. It is the zoning issue, and it's all done by state and local governments. And this was an effort to limit density. And I think that's very important to understand that this is not something you can wave a magic wand over and control alone from the White House. And that's very important. There are a lot of proposals out there. What actually gets enacted in terms of proposals depends on Congress. And right now, the chances of Congress being sort of one side or the other are pretty slim. We're likely to have a split Congress. But I think more importantly is we have an affordability problem that is a supply problem. We know that. We know that it is bothering people, and it is a huge problem in terms of building wealth for a whole generation, if not 2 generations of people. And that's one of the reasons why millennials are not as happy as their predecessors, because they do want to buy a home and they do want to own a home. But these zoning problems are really very much state and local problems. And I think that's the issue, and that's where we're sort of dancing around, and there is no magic wand.
So let's leave it at that. There's probably more captions of this. So, and again, the reason why I brought up that the $25,000, first-time home buyer credit or something like that, it's another carrot dangled out there. They said at the last election cycle it never went through. Now they kind of doubled down and added another 10 grand on top of it. So guys, it isn't going to go through. So don't sit there and wait for the federal government to issue you a $25,000 credit if you're looking to buy that first house. Now, again, on the home builder side, you have a lot of people saying, oh, these guys are going to go bankrupt. They're going to go out of business. Nobody's buying homes. They have whole subdivisions going out of business. Guys, here's their stock prices, how much they gained today. So relax on the housing crash side. There's none in sight. There might be areas like Austin and things like that, just pods of areas that might kind of get hammered. But overall, we're seeing nice stability in the housing market throughout the rest of the country. So that's what we have right through there. Let's now see what the overall markets are doing right now. The Dow Jones, let's see if we are closed for today. Let's refresh this. The Dow Jones is up 323 points, adding to its record. And I don't know if it's a record high, but it keeps going up there. Dow jumps more than 240 points as it wraps up a week of high notes. We have the S&P up 32, the NASDAQ up 116, the Russell 2000 up 2%. We have the VIX down, continuing to come down. That gives us, stability in the markets. Now let's see what cryptocurrency does. Come on, buddy. Holy shnikes. It's almost $60,000 a coin. So everything's working in the good direction today. So I'm going to say Friday the 13th. In this case, I'll take it. So my name is Dan Frio. I'm a licensed loan officer all over the country, in all 50 states as well as Puerto Rico. And if you're out there and you're looking to maybe buy that first house, buy that first investment property, or maybe looking to pull out some cash on your house, maybe to pay off some of those high credit card debts, please reach out to us. How do you find more about me? Go to therateupdate.com. Here's our website. If you'd like to call us, scroll down to the bottom right through here, and you can call us at 1-844-775-5626, or you can reach me personally at dan@therateupdate.com. Thanks so much for watching, guys. God bless. Have a fantastic weekend, and God willing, I'll see you back here on Monday